Hey everyone, it's Matt Donahue with Mission Financial Planners. This is your weekly update for the week of, I guess it's July 10th. I'm back in the office finally. We're going to give you your weekly update on Thursday instead of Monday, and then we'll be back to our normal schedule next week. So let's jump into it. First half of 25 was really a paradox. Markets were volatile, headlines were relentless, and yet for the disciplined and the diversified investors, there was reward. Investors who stayed the course didn't just survive the turbulence, they came out ahead. This week, we're going to look back at what we've learned, what the numbers tell us, and how we can use those insights to plan smarter for the second half of this year. Let's talk about the economic pulse. Economic indicators point to a soft but steady economy. Services PMI improved to 50.8. Manufacturing has held at 49. The labor market is still strong. The U.S. added nearly 147,000 non-farm payrolls, and the JOLTS openings rose to nearly 7.8 million. Beyond the stats, market behavior taught a more personal lesson. Large caps dropped almost 19%, small caps fell over 24%, but by the end of June, large caps had largely rebounded. Those who stayed invested and those who stayed diversified, those are the people who came out ahead. International equities beat the US by about 12%, thanks in part to a falling dollar. Fixed income added ballast, commodities delivered, and cash returned 2.1%. It's a reminder that sitting out and sitting in cash is not just a strategy, it's very expensive. Let's talk about the stoic investor for a second. Marcus Aurelius once said, "Love the humble art you have learned and take rest in it." That's as true for financial planning as it is for any craft. Markets reward process. They reward preparation. They reward people who show up even when the room is empty, even when no one's clapping yet. It's kind of like a comic workshopping new material at a late night club. They're not doing it for the money. They do it because they love it, because it matters. That's the mindset we bring to planning. Not chasing fads, just steady work, long-term vision, and a commitment to the craft. Shifting gears a little bit to tax planning, specifically dependent credits in 2025. We know the big beautiful bill was just passed. Keep it in mind, we're still digesting that. But for 25, the child tax credit is up to $2,200 per child. It's refundable up to $1,700. If you're not sure what that means, give us a call. We're happy to talk about it with you. The credit for other dependents adds $500 more for those over 17 or adult dependents. Child and dependent care credits cover up to $6,000 in care expenses if you're working. And then there's the earned income tax credit. If you qualify, the refund could be as high as $8,046. Those rules are clear, but documentation matters. Get those social security numbers, employee identification numbers, receipts. Get them all in order now, not next spring. Tax planning is a year-round sport. One of the parts of financial planning I'm really passionate about is extended care planning and caregiving. You put together all these plans and then, your body doesn't cooperate with you for some reason. So let's talk about the emotional side of this, caregiving. If you're worried about your parents or yourself or your spouse, the warning signs are often really subtle. It's a missed medication, it's some expired food, maybe unpaid bills, maybe hygiene isn't quite what it was. Maybe they're not as active socially as they were anymore. If you're seeing those signals, it might be time for a serious conversation. There's also tools that you can take advantage of. There's long-term care insurance, there's hybrid insurance and annuities out there, there's Medicaid trusts. Use them early while options last or still exist. The worst thing you can do is wait till after something happens and then say, what are my options? The best thing to do is talk to your advisor, talk to your family, talk to your legal team, and do it before it becomes some kind of crisis. A couple closing thoughts for you. We're rounding the corner into the second half of the year. Now is the time. Rebalance your portfolio, revisit your estate plan, get ahead on your taxes. And if someone in your life needs help, don't wait. And by the way, folks, take care of yourself. Make sure you have an extended care plan in place as well. This isn't about fear. This is about responsibility. It's about craftsmanship. It's about taking care of the people you love and taking care of yourself. The humble arts, investing, teaching, caregiving, they don't reward panic. They reward preparation. So love the work, respect the process, and take rest in the long view. Thanks, everyone. We'll see you all again next week. Bye-bye.